heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from San Francisco to our TV and radio audiences around the world, welcome to a special edition of Bloomberg Technology. I'm Ed Ludlow. In just a few moments, Nvidia CEO Jensen Huang will join us for a live interview following their latest earnings report. The company posting a revenue forecast that beat consensus but fell short of some of the most optimistic estimates, stoking concern that the explosive growth is waning. Let's get right to Bloomberg semiconductor correspondent Ian King, who joins me on set. Let's start with the basics, the fiscal third quarter forecast and what we learned through it.
Yeah, that forecast was fine if you compare it to consensus. It was there or thereabouts, and for most of the companies in the world that will be great and everybody would be happy, but this is Nvidia. This is a company which, beats pretty much every quarter and by an order of magnitude. And it didn't do that, and it didn't indicate it would do that, and that raised a lot of questions, as we heard on the call.
There are many storylines. I think the demand from the hyperscalers is clearly intact, but Blackwell was everything. I want to play a soundbite of what Jensen Huang said about Blackwell. Listen to this.
The change to the mask is complete. There were no functional changes necessary. And so we're sampling functional samples of Blackwell, Grace Blackwell, in a variety of system configurations as we speak.
The main point here is that there was not a design issue with Blackwell itself, as had been reported, but based on what Nvidia said, this was about the production mechanism. Bloomberg's Ian King, you did a very good job in the Top Live blog of explaining a GPU mask. Could you just try to give a short version of that to our audience?
Yeah, the mask is basically the blueprint which basically is used to burn in the circuit onto the surface of the chip to give it its function, right? That is a very important step. That's the fundamental blueprint. And this, they were saying, we didn't get it wrong, but when it came to manufacturing it, it didn't produce as many good chips as we wanted, so we made some tweaks to that. Didn't have to redesign it, but made some tweaks, and that is helping us to get a better yield.
It's worth noting at this stage, the stock's down almost 7% in after hours, had been down more at the conclusion of the call. I think basically because we didn't learn enough about Blackwell. What they said was in the fiscal fourth quarter of fiscal year 25, there will be several $billion of sales through Blackwell. Why does the market want more, and what does it want?
They wanted a reassurance from Nvidia's management, and they wanted reassurance in the form of details. They wanted Jensen to put his arm around everybody and say, don't worry, it'll be fine, this is how much I'm going to get. They were asked questions of how many billions and when will those billions exactly come in. And Colette Kretz, the CFO, and Jensen Huang essentially avoided that question and refused to give that precise reassurance.
We're showing some of the after-hours reaction, not just in Nvidia itself, but some of its peers, both on the chip-making side, the server equipment providers, and I think AMD and ARM in particular are very noteworthy. Bloomberg's Ian King, stay with us. I want to go out to Chicago and Bloomberg's Ryan Vlastelica on our equities team. And Ryan, that's the broad summary from me about the names moving in after hours. There's probably a bigger picture after hours movement in the markets as well. Start with Nvidia and work outward from there.
Sure. Well, one thing I would say about Nvidia's after-hours decline is that it does come after a very strong year-to-date performance. I think it closed up more than 150% this year. So even though the forecast was maybe a little bit shy of some of the most optimistic expectations, it did beat expectations, and it is, coming off such a huge gain. So it's not necessarily surprising to see a little bit of a consolidation now. And I think even the decline is a little bit less than the options market was anticipating. So just some context there for looking at the decline. But you're right that pretty much we are seeing widespread weakness following this report. All the mega caps are modestly lower. We are seeing much more pronounced weakness in other chip makers and chip design companies and so forth. So yeah, certainly it does seem like the initial read through here is negative, but again, it does come after a very strong start to the year.
We made a big deal about this earnings print for quite a long time. I look at something like an Invesco QQQ, the ETF that tracks the NASDAQ 100, and I think we're down around a percentage point, right? But in truth, Ryan, in the market's reaction, was this the macro level event that we thought it was going to be?
That's a great question. I would say that it's kind of close enough in line with expectations, even if it is a little bit shy of the most optimistic ones, that I don't think this is going to really cause people to really change how they're allocating, change their opinions on AI as this kind of fundamental secular driver. But maybe in the near term, we do see a little bit of weakness. I mean, again, some of these stocks have been moving up so much. There have been sort of kind of growing calls about their valuation, some concerns about that. I don't know if this is the kind of absolute blowout that would just, cause people to continue piling into the way that they were doing earlier this year.
There is a lot in the news cycle, inclusive of and outside of Nvidia. I think one of the names that you note in after hours is Supermicro. It's down significantly. There's an Nvidia relationship to that, and then there's the news around that name in and of itself.
Yeah, absolutely. So we saw yesterday a short report came out. Today it's delaying the filing of its 10K. Both of those caused us a weakness in the stock. I think today it was down more than double digits. So, a lot of reasons to be concerned there in general. And it is one of NVIDIA's biggest customers. I think it's the third largest. So, this is just another reason for people who might have been kind of souring on Supermicro to, maybe be pulling the sell button a little bit.
Bloomberg's Ryan Flaselica with the after hours action out of Chicago. Thank you. Let's get the reaction from the sell side with one of the stocks relative bears. D.A. Davidson's Gil Luria had a neutral rating and a street low $90 price target on shares of Nvidia. He joins us now. And Gil, I guess, does that change your bearish perspective on the stock and your main takeaway from the analyst's call?
The quarter was a very good quarter. Their ability to continue to grow, delivering chips at this rate, at this scale, is fantastic and unprecedented. I don't think there's much of a revenue issue here, of a growth issue here. I think the little bit of a pushback is probably more around the margin situation. You had a good conversation with Ian about Blackwell and some of the moving pieces. Part of what's happening with Blackwell, it's a new product. It's got a few hitches along the way. That put pressure on gross margins. And then operating margins grew more than anticipated. So less of the top line upside flowed to the bottom line. And that's probably where investors are getting a little bit more cautious than they were before, because in the last several quarters, the huge upside to revenue flowed all the way to the bottom line, creating huge upside there. To believe in Nvidia right now is to believe 2026 calendar is going to be about $200 billion of revenue and about $4.5 to $5 of earnings. That's only possible if they continue to get this type of growth on the top line and more leverage. And the second part of that equation looks a little less certain right now.
Gil, when you said that $200 billion figure, Bloomberg's Ian King, who's covered semiconductors at this company since 1998, sat next to me still for what it's worth, gave a little smile. I mean, it's an astonishing figure. I think there's a lot of emphasis here on Blackwell. How did you react to the news of several $1 billion in fiscal fourth with Blackwell and the explanation that this was a production issue impacting the ramp, not a sort of core design issue around the product itself?
So first of all, our estimate is far less than $200 billion for 2026. But that is
I said you're a relative
estimate.
bear, Gil, and I got that bit right, I think.
In terms of Blackwell, what happened to NVIDIA is they used to be on a 2-year cycle for the data center product, and they decided to aggressively move to a 1-year cycle and then put a lot of new feature functionality and bundle into the Blackwell platform. So that was a very aggressive agenda. And it's not that surprising that there's some challenges that they have to encounter. If they can still ship in their fiscal fourth quarter, that's a very good sign. And by the way, their customers don't really care that much. Their customers are just going to continue to buy the latest and greatest. And if that's the H200, they'll just continue to buy H200. They have made that abundantly clear on their conference calls. Microsoft, Meta, Amazon, Google, Tesla, Elon Musk have made it abundantly clear they'll buy as much GPUs as NVIDIA can produce, at least this year, because they're saying the demand signals are there. As long as the demand signals are there, they'll buy whatever NVIDIA is selling. And towards the end of the year, a piece of that will be Blackwell.
Gil, Jensen Huang was at pains and gave a detailed answer that basically summarized NVIDIA as a systems vendor. The discussion around NVLink, CPUs, everything beyond GPU. How much credit do you assign the company for that? the sort of complete systems that they sell?
Tremendous amount of credit. Let's start with the beginning. When history is written, we'll talk about how Jensen Huang and Nvidia created the capabilities that make generative AI possible today in a similar way that Elon Musk is responsible for the electric vehicle. And part of the genius wasn't just seeing that this is coming, that accelerated computers coming, AI capabilities coming well before anybody else did. It's also realizing that in order to create a moat around the chip, they need to do a couple of things. One is to own the proprietary software around that CUDA, but the other thing is to enhance the bundle as much as possible. These GPUs work in arrays. When they work together, thousands or sometimes tens of thousands of GPUs together. When you box those up in a box with multiple GPUs, CPUs, wiring, cabling, and firmware, you make it harder for your competitors to catch up. And they've done a remarkable job of that.
I also wonder about all the rest. The story thus far has been about the hyperscalers and Meta, 5 names essentially, being the core customer of Nvidia. We got some detail on low double-digit billions sales this year in sovereign AI. Do you see evidence that the market is broadening out beyond just the cloud providers?
Not really. It seems like those 5 are still a substantial amount of the revenue. And those 5 have, in their most recent calls, said some interesting things. One of them is that they consistently said they are over-investing. So they said they definitely want to invest more. We're seeing that in results today, but they also use the term over-investing. Over-investing is something you do before you do the other thing. And they made it clear that they're only going to do so when they have the demand signals. If, for whatever reason, demand for AI capacity goes down, for instance, because compute doesn't continue to drive performance of foundational models, you're going to see those same 5 actors pull back and say, you know, maybe we have enough data center capacity, or maybe what we have in the pipeline is enough. And that's the concern for 2025 and 26, is that those very companies could do that. Beyond that, these are the same companies that are developing their own chips. They're at various stages of this, but Google's TPUs are probably as good as Nvidia's. So in terms of their internal use and selling to customers such as Apple, Google's already caught up. Amazon's catching up. Meta and Microsoft are earlier stages. But these same companies that are buying every GPU from Nvidia they can will be the ones that'll buy possibly less next year and the year after that.
I just want to reflect for our TV and radio audience, there are people tuned in around the world. My understanding is there are watch parties in cities from New York to London for this earnings. We've hyped it up for weeks. Probably this is the most unique earnings print that I've covered in my career. What about for you in the semiconductor space? Why is this so different?
Well, so first of all, I tried to participate by wearing NVIDIA green today. But importantly, NVIDIA is important because of how much they've added to the cumulative earnings of the S&P 500 and the cumulative performance. But I wouldn't necessarily extrapolate their success or sometimes setbacks to the rest of the market, because what they do is very specific. The growth in data center construction and data center GPU fulfillment into those data centers is a very small set of companies. I'd argue NVIDIA is sucking the oxygen for the room from a lot of other technology companies. So we celebrate with NVIDIA because they've added so much value. I wouldn't necessarily read through to the rest of technology.
Luria of DA Davidson, the relatively most bearish or perhaps the least bullish name on the street. Thank you. So welcome to this special edition of Bloomberg Technology for our TV and radio audience around the world. Joining me now is Jen-Hsun Huang, CEO of Nvidia, straight from the analyst call. And Jen-Hsun, good evening, good afternoon to you. I think the market wanted more on Blackwell. They wanted more specifics, and I'm trying to go through all of the call and the transcript. It seems like, very clearly this was a production issue and not a fundamental design issue with Blackwell. But the deployment in the real world, what does that look like tangibly? And is there a sort of delay in the timeline of that deployment and thus revenue from that product?
Let's see. That's just the fact that I was so clear, and it wasn't clear enough. kind of tripped me up there right away. And so let's see. We made a mass change to improve the yield. Functionality of Blackwell is wonderful. We're sampling Blackwell all over the world today. We show people, giving tours to people of the Blackwell systems that we have up and running. You could find pictures of Blackwell systems all over the web. We have started volume production. Volume production will ship in Q4. Q4, we will have billions of dollars of Blackwell revenues, and we will ramp from there. We will ramp from there. The demand for Blackwell far exceeds its supply, of course, in the beginning, because the demand is so great. But we're going to have lots and lots of supply, and we will be able to ramp starting in Q4. We have billions of dollars of revenues, and we'll ramp from there into Q1, into Q2, and through next year. We're going to have a great next year as well.
Jensen, what is the demand for accelerated computing beyond the hyperscalers and Meta?
Hyperscalers represent about 45% of our total data center business. We're relatively diversified today. We have hyperscalers, we have internet service providers, we have sovereign AIs, we have industries, enterprises. So it's fairly diversified. Outside of hyperscalers is the other 55%. Now, the application use across all of that data center starts with accelerated computing. Accelerated computing does everything, of course, from the models, the things that we know about, which is generative AI, and that gets most of the attention. But at the core, we also do database processing, pre and post processing of data before you use it for generative AI, transcoding, scientific simulations, computer graphics, of course, image processing, of course. And so there's tons of applications that people use our accelerated computing for, and one of them is generative AI. And so let's see, what else can I say? I think that covers it.
Well, let me jump in, Jensen, please, on sovereign AI. You and I have talked about that before, and it was so interesting to hear something behind it, that in this fiscal year, there will be low double-digit, I think you said, billions of dollars in sovereign AI sales. But to the layperson, what does that mean? It means deals with specific governments. If so, where?
It's not necessarily. Sometimes it's deals with a particular regional service provider that's been funded by the government, and oftentimes that's the case. In the case of Japan, for example, the Japanese government came out and offered subsidies of a couple $1 billion, I think, for several different internet companies and telcos to be able to fund their AI infrastructure. India has a sovereign AI initiative going, and they're building their AI infrastructure. Canada, the UK, France, Italy, I'm missing somebody. Singapore, Malaysia, a large number of countries are subsidizing their regional data centers so that they could become able to build out their AI infrastructure. They recognize that their country's knowledge, their country's data, digital data, is also their natural resource. Not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Jensen, you use the word resource, and that makes me think about the energy requirements here. I think on the call you talked about how the next generation models will have many orders of magnitude greater compute needs. But how will the energy needs increase, and what is the advantage you feel NVIDIA has in that sense?
Well, the most important thing that we do is increase the performance and efficiency of our next generation. So Blackwell is many times more performant than Hopper at the same level of power used. And so that's energy efficiency. More performance with the same amount of power or same performance at a lower power. And that's number one. And the second is using liquid cooling. We support air cooling, we support liquid cooling, but liquid cooling is a lot more energy efficient. And so the combination of that, all of that, you're going to get a pretty large step up. But the important thing to also realize is that AI doesn't really care where it goes to school. And so increasingly, we're going to see AI be trained somewhere else, have that model come back and be used near the population or even running on your PC or your phone. And so we're going to train large models, but the goal is not to run the large models necessarily all the time. You can surely do that for some of the premium services and the very high value AIs. But it's very likely that these large models would then help to train and teach smaller models. And what we'll end up doing is have few large models that are able to train a whole bunch of small models, and they run everywhere.
Jen-Hsun, you explained clearly that demand to build generative AI product on models, or even at the GPU level, is greater than current supply. In Blackwell's case in particular, explain the supply dynamics to me for your products and whether you see an improvement sequentially quarter on quarter or at some point by the end of fiscal year into next year.
Well, the fact that we're growing would suggest that our supply is improving. And our supply chain is quite large, one of the largest supply chains in the world. We have incredible partners, and they're doing a great job supporting us in our growth. As you know, we're one of the fastest growing technology companies in history, and none of that would have been possible without very strong demand, but also very strong supply. We're expecting Q3 to have more supply than Q2. We're expecting Q4 to have more supply than Q3, and we're expecting Q1 to have more supply than Q4. And so I think our supply condition going into next year will be a large improvement over this last year. With respect to demand, Blackwell is just such a leap, and there's several things that are happening. Just the foundation model makers themselves, the size of the foundation models are growing from hundreds of billions of parameters to trillions of parameters. They're also learning more languages. Instead of just learning human language, they're learning the language of images and sounds and videos, and they're even learning the language of 3D graphics. And whenever they are able to learn these languages, they can understand what they see, but they can also generate what they're asked to generate. And so they're learning the language of proteins and chemicals and physics. It could be fluids, and it could be particle physics. And so they're learning all kinds of different languages, or learn the meaning of what we call modalities, but basically learning languages. And so these models are growing in size. They're learning from more data, and there are more model makers than there was a year ago. And so the number of model makers have grown substantially because of all these different modalities. And so that's just one. Just the frontier model, the foundation model makers themselves have really grown tremendously. And then the generative AI market has really diversified, beyond the internet service makers to startups, and now enterprises are jumping in, and different countries are jumping in. So the demand is really growing.
Jen-Hsun, I'm sorry to cut you off. I will lose your time soon. You've also diversified. And when I said to our audience you were coming on, I got so many questions. Probably the most common one is, what is Nvidia? We talked about you as a systems vendor, but so many points on Nvidia GPU Cloud. And I want to ask finally, do you have plans to become literally a cloud compute provider?
No. Our GPU Cloud was designed to be the best version of NVIDIA Cloud that's built within each cloud. NVIDIA DGX Cloud is built inside GCP, inside Azure, inside AWS, inside OCI. And so we build our clouds within theirs so that we can implement our best version of our cloud, work with them to make that cloud, that infrastructure, that AI infrastructure, the NVIDIA infrastructure, as performant, as great TCO as possible, And so that strategy has worked incredibly well. And of course, we are large consumers of it because we create a lot of AI ourselves, because our chips aren't possible to design without AI, our software is not possible to write without AI. And so we use it ourselves, tremendous amount of it. Self-driving cars, the general robotics work that we're doing, the Omniverse work that we're doing. So we're using the DGX Cloud for ourselves. We also use it for an AI foundry. We make AI models for companies that would like to have expertise in doing so. And so we are AI, we're a foundry for AI, like TSMC is a foundry for our chips. And so there are three fundamental reasons why we do it. One is to have the best version of NVIDIA inside all the clouds. Two, because we're a large consumer ourselves. And third, because we use it for AI Foundry to help every other company.
Jen-Hsun Huang, CEO of NVIDIA, I want to thank you for your time, the extended conversation straight off the earnings call. Thank you. NVIDIA earnings, fiscal, it's good to see you too. Fiscal second quarter done. I point out that in after hours, the stock is down still almost 7%. There'll be a lot of analysis to be done overnight by the sell side, by the buy side, and we'll bring you the best from Bloomberg's reporters and editors. From San Francisco, this is Bloomberg Technology.